You've got questions, we've got answers. We have the man to answer them. Jeffrey Levine from Buckingham Wealth Partners. Jeffrey, welcome back to another episode of Ask the Hammer.
It's good to be back with you, Mr. Retirement.
Good to have you here. I've got an interesting question. A reader wants to know whether they're always eligible for the 0% capital gains tax rate.
It's an interesting way to phrase that. Am I always eligible for the 0% capital gains rate? I guess in some ways the answer is yes, and in some ways the answer is no. In a sense, yes, you are, in that we all have a potential 0% long-term capital gains rate. The question is simply, is your income low enough that you qualify? So this year, 2022, if we're looking at the 0% capital gains bracket, it's single individuals with up to about $41,700, just below that, $41,675. For married couples, it's twice that amount, so $83,350, and this is critical, taxable income. Taxable income. So that's after your standard deduction, or if you itemize, taking into consideration your itemized deductions. If your income, your taxable income, that is below that amount, so adding your ordinary income plus your capital gains and then subtracting your deductions, if it's below those amounts, then you are in the 0% long-term capital gains bracket, which is pretty awesome. The 0% long-term capital gains bracket is actually even better than not paying a tax. Paying a 0% tax is better than not paying a tax.
That's fair. So if your taxable income is above those thresholds, do you pay 0% on the amount up to the threshold and then at the next highest rate?
So the way this works is the ordinary income you have sort of serves as your baseline income. It's the income that is on the bottom of your pie, right? It's the crust. Now, some have thicker crusts, some have more narrow crust, but that's the base layer. You use that first. Now, anything above that's capital gains, if it's still below those thresholds, will be at 0%. Once you go above it, you hit the 15% rate. And ultimately, if you go high enough, you will hit the 20% long-term capital gains bracket. And it's important to note too, that for those individuals with more than $200,000 of income, or married couples with more than $250,000 of income, there is an additional 3.8% surtax on net investment income. But as a whole, if you are below those amounts, again, adding up all that income, you are at the 0% bracket. The common mistake a lot of people have is they look at their capital gains, their long-term capital gains, as kind of a separate bucket of income and say, oh, I had less than $40,000 or $80,000 of long-term capital gains, therefore it's tax-free. Again, you have to first layer in that ordinary income, and then and only then do you add the long-term capital gains on top.
Right. So just to be clear, it's not a wedding cake where you're at 0% up to that threshold, and then 15% for taxable income above that threshold.
I guess the simplest way to think about this is your first tranche, your ordinary income is taxed first. And that's favorable to you as a taxpayer because ordinary income tax brackets get to higher rates, right? You can have a 37% rate for ordinary income and only a 20% rate for long-term capital gains. So by layering in your ordinary income first, it's actually a taxpayer-friendly system. But of course, that means if you have, let's say, $84,000 of taxable income, that's ordinary. So let's say you had $115,000 roughly of income that you subtracted your standard deduction from. It got you down to, your itemized deductions, brought you back down to your $83,000 mark. And then above that, you had capital gains. All of those capital gains will be subject to 15% rate up until you hit the 20% rate. You could have none of it taxed at 0%. Now, by contrast, if you had, let's say, $90,000 of ordinary income to start, and you took your itemized deductions, that brought you down to 60 as a married couple. The first 23,000 or so of long-term capital gains would be at 0%. Anything above that would hit 15, and then ultimately you'd be at 20% for the highest.
Yeah. So when you mentioned thin and thick crust, I was thinking Detroit style, Chicago style, New York style pizza.
There you go. We're going to go with pizza instead of cake or pie. I like it.
All right. Well, you answered the reader's questions and all my silly follow-ups, so much appreciated.
Well, dare I say, Bob, that question was easy as pie. All right, enough of that. If you've got a question you'd like Bob and I to tackle, let us know. Email us at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. And Bob and I look forward to tackling your questions real soon.